Hello, good day everyone. So today we are looking at Act 327, Taxation and Fiscal Policy 2. So we are still under the third topic, which is double taxation arrangement. So we are in study session 3B. The last time we considered solution to question number 2 in our study pack. And this time around, solution to question number 1 rather in our study pack. But this time around we look at solution to question number 2 in our study pack. The facilitator is Mr. J. Akindele. So now let's look at the question now. The question is about double taxation. And the requirement of the question is for us to consider Alhaji Tekoye tax liability to Nigerian government if the Nigerian tax authority did not agree that the foreign tax should not be his tax income earned in London. That is, if the tax authority should not allow him to consider his foreign tax to be his tax earned in London. So under that, we try to look at the computation of his tax liability for the 2017 tax year. And the consolidated salary for Alhaji Tekoye, which is for the foreign income only, is 10,510,000 naira. That was given in the question. Next, we try to deduct the consolidated tax relief. And this is 200,000 plus 20% of the consolidated salary, which is 10,510,000 naira. So the total figure is 2,302,000 naira. So if we take that out of 10,510,000 naira, that will give us 8,208,000 naira. So the next thing, we are going to subtract the tax exemption. And there is no tax that was exempted for Ms. Alhaji Tekoye, so that was nil. So we still have the same figure, which is 8,208,000 naira. So the schedule of tax paid in Nigeria, as per the Nigerian tax law, is that the first 300,000 naira will be at 7%. And 7% of 300,000 naira will give us 21,000 naira. The next 300,000 naira will be at 11%. That is 33,000 naira. Then the next 500 naira at 15%. That is 75,000 naira. Another 500,000 naira at 19%. That is 95,000 naira. So the next 1,600,000 naira at 21%. That will give us 336,000 naira. And the last amount there, which is about 5,008,000 naira at 24%, that is 1,201,000 naira and 20 naira. And the total tax paid in Nigeria is 1,761,920 naira. For the Nigerian rate, the rate is that we have to consider the tax paid all over the total profit multiplied by 100 over 1. And the tax paid, according to this schedule, based on our calculation, is 1,761,920 naira divided by the total profit, which is 8,208,000 naira. So if we divide that, multiplied by 100 over 1, that will give us 21.47%. And the Commonwealth rate from the question is 1,200,000 naira. That is in naira value divided by 10,510,000 naira. That is the consolidated salary. That's why we did that. The rate is that tax payable abroad all over taxable profit multiplied by 100. So if you divide 1,200,000 naira divided by 10,510,000 naira, that will give us 11.42%. Therefore, it should be noted that from the question that Alhaji Tekoye is not a resident individual in Nigeria. So therefore, since the Commonwealth rate is less than the Nigerian rate, then the relief to be granted to Alhaji Tekoye will be half of Commonwealth rate multiplied by the Commonwealth rate. That is the half of that Commonwealth rate will give us 5.71%. And the double taxation relief for the Alhaji Tekoye will be 10,510,000 naira multiplied by 5.71%. That is 600,131 naira. So the tax, due or tax payable by Alhaji Tekoye will now be the gross tax liability, which is 1,761,000 naira, 761,920 naira. We will now subtract the double taxation relief, which we are able to, we got here. So we subtract it from that figure. So we have the final tax due to Alhaji Tekoye, which is 1,161,799 naira. But however, it should be noted that these provisions were provided in the Nigerian tax law as regards the double taxation arrangement. And the provision is that, and one of those provisions is being applicable here, and we have one that were applicable in our first solution in question 1. The provision is that if the Commonwealth rate is less than or equal to half Nigerian rate, then the relief will be the Commonwealth rate, depending on the questions. And if the Commonwealth rate is greater than half of Nigerian rate, then the relief will be half of Nigerian rate. Also, for a non-Nigerian company or a non-resident individual in Nigeria, depending whether it's a company, a corporate body, or an individual, if the Commonwealth rate is less than or equal to Nigerian rate, then the relief will be half of Commonwealth rate. And if the Commonwealth rate is greater than Nigerian rate, the relief will be Nigerian rate minus half of Commonwealth rate. And it should also be noted that the basis or the ratio of calculating this thing, which we apply in one of these solutions here, should, in case of any other question, is that the Nigerian tax rate should be the tax paid or tax payable all over total profit or taxable profit, depending on the question, because some examiner may use the terms total profit or taxable profit multiplied by 100%. And for the Commonwealth rate, the rate shall be tax paid or tax payable abroad all over total profit or taxable profit multiplied by 100%. Like this information, the hints, and the formula for the Nigerian rate and tax rate is also very, very important for us in the subsequent questions. So thank you for listening. So the facilitator again is Mr. J. Akinlele.